Hey guys, welcome back to my channel. Today we are looking at the Morningstar candlestick formation. So I did a post on this today and I figured I'd follow up in video. I know you guys like videos on candle patterns and this is a really good one. So first thing I'm going to do, you guys, is actually let's talk about what the Morningstar formation is. So basically, you guys, the Morningstar formation, it looks like this. So you're going to see, let me try to get my red candle here. So you're going to see a bearish candle, okay, followed by a doji candle. And by the way, we want to look for this on the 4-hour chart or higher, okay? I personally would not even bother looking at it on anything lower than that. If you're a day trader, the 4 hours fine. It's obviously more accurate the higher the time frame you use, as with any candlestick pattern, right? And then it's followed by a bullish candle. It doesn't really matter the size of the candles, but it needs to be in this order, okay? And the stronger, or sorry, the better doji you have, and by better I mean a nice small body doji with really long wicks, that's going to be a better indicator that you're going to get a reversal. So this is a reversal candlestick pattern, okay? So we're going to look at it to find reversals. So if you're someone who trades on the pullback, or if you're someone who looks for major reversals, then this is a great pattern for you to know. Now, obviously, guys, when we're looking at this pattern, we want to look for it at major areas of support and resistance, okay? So just real quick, I'm going to zoom out because the area I'm looking at today is not actually a major reversal area. Some people, if you're day trading, you might still take it because a lot of day traders will still take a trade on a pullback if you have the right confirmations. However, it's going to be more accurate if you apply it at a key level, meaning if we were, down, hold on. There we go. If we were at this level here, we can see a lot of wick touches where I'm hovering at here. That's definitely a nice key level. If we saw and actually we do have a Morningstar formation right here. So let's zoom in and I'll show you that. So right there, and actually, you guys, that might be, is this the one we're looking at? No. So that's another one there. Now we didn't get a super strong reversal there, but the point being, the better the more respected the zone that you're looking at, the more accurate your entry is going to be. And that, again, that just goes with anything, but I'm just going to kind of reiterate. I have lots of videos on major reversal areas and stuff like that if you want to take a look at them. So that's what it looks like, but I want to show you obviously in real time what it looks like. So I did find one. Now I've probably lost it, but we're going to go back and look for it again, and hopefully I'm going to find it with ease. And not be, I think it actually, okay, so it actually is this one. So this is sitting at a key level, but we didn't get a huge dive up here, which often you will at a major reversal area. But of course, it just depends on a variety of things, guys, like fundamentals and other factors like that. So just keep that in mind, that if you're at a major level, you're going to have a better chance of getting a strong reversal, okay? But we are going to look at this example today. And actually, what I should have showed you, and I didn't before I erased so let me draw that really quick. I'm not going to draw them in color again, but when we're looking at it, okay, so this will be your two bearish candles followed by your bullish candle, okay? You notice how we have space between this candle's body and the bottom of these two bodies. There's a space. We call this a gap, okay? So this is a gap down right here, and this would be a gap up. And if you get that gap up and gap down, you have a stronger candle formation, okay? So you have a stronger signal, I should say. So a stronger sign of reversal. However, you're not going to see that a lot in Forex, especially if you're looking at the 4-hour chart, just due to how the candles form. You're not going to see that a whole lot, so don't fret if you can't find it. You'll see it more on stocks and indices. Just the way the market moves, you'll get more gaps. But again, it's not, you can still use the candle without having those gaps there. In this case, if we did zoom up or zoom in, a whole lot, you can see we have a tiny gap there, I believe, but nothing on this side, and that's fine. We can still use it with the right confirmations. So this is what it would look like. We have our bearish candle here, our nice strong doji in the center, and then we get our bullish candle, okay? And again, the size of those doesn't really matter. I do usually like these two candles to be strong bodied though, just especially your bullish candle, because that's confirming that we are, taking off in the other direction. Okay. Now, something I'm going to show you how to enter this trade. And the first thing I'm going to point out, so the first thing you want to do is you're going to see your morning star form after the doji. So once the doji forms and you start getting a push up, you're going to say, okay, I think we have a morning star here, right? And you can look for that reversal entry. So what I would do is look at this candle. So look at your first candle in the pattern, and you want to put a line halfway through it. Okay, so I'm actually going to grab the horizontal line tool here, and we're going to put a line about halfway through that. Okay, and this area, okay, so this halfway point is going to be your confirmation to enter your trade. So in this case, it would be to enter a buy, right? Very, very simple, you guys. Now, what I would still do is go to your lower time frames, look for other confirmation, like a common confirmation I look for would be just a long bodied candle on the 15-minute. You can use the 3 white soldiers pattern on the 5-minute. You still want to use all of those things as well. And again, we are at a key level here, so that's another confirmation for our entry. But once we get to that 50% point, that's where I'm starting to look at where I want to enter. Okay. And I'm going to place my stop loss below this wick low. Now, another thing you could do is use the ATR tool. And I have a video on that it was actually my last video. So if you want to look at that, you could also do 2 times your ATR, okay? And if you have no idea what I'm talking about, go watch that video because I explain everything there. I will just briefly show you what I mean though. So we would go in, we would apply our average true range, that's our ATR. We'd go to our entry point, our entry point is it'd be about here. And we double this value in pips, okay? So you have to move the decimal over, so it would be 14 pips. We double that. It's going to be about 28 pips, okay? So the next thing we're going to do then would be, so this is just the date price range tool. It's just going to count pips really easy for you. So you'd start from your entry and you'd go down 28 pips. And that would be about where we are. Now, if you double your ATR, so if you look at 2 times your ATR and it's looking like this, and you are, let's say, taking a day trade here, obviously your risk reward is going to be off. This would only give us a risk reward of like less than 1. It's not ideal. So you could use 1 times your ATR in this case. You just have to use your common sense, guys, and apply that, right? So you could do 1 times your ATR in this case and keep it there, all right? And a lot of the times, if you're day trading, the ATR tool is not the best. And this would definitely be a day trading opportunity because, again, we are on the 4-hour, right? So we're not really swinging that for several days. If you're taking a long-term swing, the ATR is definitely 2 times the ATR is definitely the best way to apply it. So that's something new that I've been applying, and it really, really helps you guys. So you can watch my previous video on that. Didn't work out in this case. Every example I give you is not going to be textbook, and I'm not going to go through and find another example and redo the whole thing because it's just going to make the video really, really long. But if you were at a major level and looking for a long-term reversal, 2 times your ATR would be the way to go. So you can just place it below the wick or 1 times your ATR in this case, okay? And always look at your risk reward, look at where your target is and make sure it makes sense. Now, another thing you can do if instead of having a target, so especially like if you're day trading this, you guys, you probably are better off trailing your stop, okay? You can set your target at a zone or a level. You can absolutely do that. So you could say, okay, I have a zone around here, and that's going to be my target, right? Another option, though, if you're a day trader, would be to trail your stop. That way, because you're taking a reversal trade, we don't know where that's going to end up. You're just going to maximize your profits, and you're not going to lose them back, okay, if it doesn't hit your target. So I would definitely recommend trailing your stops. And how I would do that is either on, some people do it on the hourly, some people do it on the 4-hour, would just be to move your stop loss up. Okay, so if you have a nice strong trend, that will really work out. So move your stop loss up every 4 hours. You can also do, like I said, every hour. We kind of consolidated for a little bit there, so it probably wouldn't have worked out very well, but that just is an option for you. Or you could just set your targets the way you normally do. And that's it, you guys. I just wanted to show you how I apply it. It probably wasn't the most perfect example because, again, it was on a pullback, but that's the gist of it. That's how I apply it in any situation. Generally speaking, it's a very good sign of reversal because you do have multiple confirmations within the actual pattern, right? We have the doji, it's at a strong level, we get that push up, and it's all in that one pattern. So it's a really great pattern to use. Again, you can use it on the daily, 4-hour, whichever time frame. I wouldn't recommend lower than that. That's all I have for you today. If you like this video, please subscribe to my channel. Let me know in the comments below what other types of content you want to see from me. And I'll see you in the next video.